Welcome back. It's a Friday morning. The setup seems to be quiet. Yesterday was also a very quiet session for our markets, but the focus is on individual stocks. So this is CNBC TV 18's list of top stocks for the day. And first up, it's going to be about TCS and the IT pack. Now, TCS reported a margin miss. Margins for the company came in at 24.1%, lower than consensus expectation, and that resulted in a profit miss. So profits also declined by over 1% versus expectation of an expansion. So that's on the margins. On the top line, revenues were in line with expectations. They've grown by more than 2%, but this growth was largely driven by India and the BSNL contract that the company is executing. Look at the India revenues. It's about 8.9% of their overall revenues, and those revenues have doubled on a year-on-year basis, 95% up year-on-year, and a quarter-on-quarter basis is up 21%. If you strip that out, the company's key markets like North America, etc., have been under pressure. The company said in the con call they face client-specific issue in health and life sciences, weak discretionary spending in North America retail, and there were challenges in UK and Europe in the manufacturing sector, which affected the company's revenue growth. The positives, though, in the numbers: one, hiring has picked up, and two, the BFSI recovery is showing traction. So BFSI revenue growth, which was about 0.6% in Q1, has further picked up to 1.9% growth. But still, there is a margin miss, and there is that, revenue growth, which is driven only by BSNL. So brokerages are lowering their estimates. JP Morgan cuts margin estimates by 50 basis points. Target price is at 5,100, but they say we will use any sharp correction to add. Nomura lowers EPS estimates by about 2% and Jefferies too is cutting estimates by 1 to 2%. Only bear in mind that Infy has underperformed peers in the last 1 month, having fallen nearly 6%.
Okay, all right, Rima. Thanks for that. Well, let's hop across to Abhishek. He's tracking IRDA. Morning, Abhishek.
Good morning. So IRDA has come out with their Q2 numbers. The disbursements have grown by 44% YOY but declined by more than 16% sequentially. The spreads have come under pressure on a sequential basis. They are down by 11 basis points. However, the net interest margin has expanded to 3.34% versus 3.29% in the previous quarter. With reference to the PNL, the NII growth is 52% YOY and about 7.7% sequentially. They have made a provision this time around of close to 34 crores versus provision write back that you saw in the same quarter last year and even in the previous quarter. So PAT has come in under pressure with respect to sequential growth being at just 1.1% on account of the provisions that they have made. So that's a weaker number coming in from IRDA. Back to you.
Thank you very much for that. Tata Elxsi reported numbers yesterday post-market hours. It's not an exciting quarter at all, fairly muted, but the company holds on to their FY25 guidance, which means they're penciling in a recovery in the second half. On the top line, it's a revenue growth of 0.2%. The company is doing well in the transportation vertical, courtesy some of its in-house, the Tata Group related auto companies. But the other two verticals, healthcare and media and communication, the company continues to struggle on these two. Margins too disappointed the street. So adjusted margins are down nearly 60 basis points. On a reported basis, you will see a margin expansion, and that's because in the prior quarter, there was a one-off boost to their margins. That said, the company in the conference call yesterday said that they maintain FY25 will be better than FY24, which means they're looking at nearly a double-digit growth because last year they had a 9.6% top-line growth, and they're also looking to maintain their PBT margins in their preferred band of 28 to 29%. But this quarter, not very exciting.
All right, well, let's talk about, thanks for that, Rima, Bandhan Bank, right? They've got new leadership, bombed out name completely. Abhishek, what's the street making of it?
Well, a positive sign for Bandhan Bank that they have got a new management at the helm. So RBI has approved Mr. Partha Sengupta as the MD and CEO of Bandhan Bank for a period of 3 years. He has to join before 10th of November 2024. Bandhan Bank also received claims raised to National Credit Guarantee Trustee Company under CGFMU, that is Credit Guarantee Fund for Micro Units, and ECLGS, that is Emergency Credit Line Guarantee Scheme. So in total, Bandhan Bank has now received up to 1,460 crores from the dues that they had of about 2,213 crores. So about 65-66% recovery is what they had made. In the first tranche, remember, they had received 100%, that is about 900 odd crores. So in the second tranche, the money that they have received is slightly on the lower side, but it's a good factor that they have received money. Analysts were expecting zero recovery in this account. So in totality, about 66% of the dues have come in for Bandhan Bank. Back to you.
Thank you very much for that. Over to Vamakshi now for Anand Rathi and Oberoi Realty. Vamakshi.
Well, absolutely, Rima. Anand Rathi on our radar. The AUM for the company has come in at 75,100 odd crores. This is an uptick of almost 8.8% that we're seeing sequentially, and with that they've managed to surpass the earlier guidance, and thereby the revised guidance now stands at 80,000 crores. Net inflows were down nearly 31% sequentially. That is a bit of a concern. We'll be waiting for comments that come through from the management on this front. But the revenue is seeing a decent uptick of 2% operationally. However, the performance is better, and that is because the PBT margins have improved by around 48 basis points sequentially to 42.1%. The net profit too is seeing an uptick of almost 4% quarter on quarter. So, given those developments, going with a green for Anand Rathi. Overall Realty, on the other hand, also going for a green on this one. Board has approved raising funds up to 6,000 crores. They will be considering various modes, which also includes a QIP route. So, given that development, green for Overall Realty.
Okay, all right. Thanks a lot for that, Vamakshi. Well, let's hop across to Vinny. She's here to tell us about Ola Electric and Mazagon Dock. Vinny?
Good morning. So for Ola Electric, we're expecting a bit of a red again. Now, let's not forget two-wheelers have been giving a lot of higher discounts to attract customers, and seems like Ola has announced that Boss 72-hour rush sale, which will be starting from today till over the weekend. Now, this is additional discounts that they will be giving. They've said that there's a benefit that S1 scooter portfolio around 49,999 rupees. This indicates that, they really need to give higher discounts to attract customers. So yes, from the customer point of view, thumbs up, because you're getting it cheaper. But from the company point of view, it will impact their profitability. So we're keeping an eye out on that. Plus, Ola has been a bit subdued in performance and in trade in the last couple of months that we've seen. So keeping an eye out on Ola, because we're expecting a bit of a red. Mazagon Dock, we are expecting positive up move coming in for Mazagon Dock. They've received a 121 crore order from Magenco. That's a Maharashtra State Power Generation. And this is involving supply installation as well as commissioning of AI-based comprehensive infrastructure projects. So keep an eye out on that.
Thank you very much for that. Sansera Engineering also has some news flow. Abhishek joins in with that. Abhishek.
Well, Sansera Engineering has launched a QIP as per our sources. Now, they will raise about 1,200 crores. The indicative price is about 1,554 rupees per share, which is at a discount of around 2% to yesterday's closing price and about 5% to SEBI floor price. So, the equity dilution would be around 14.3%. The lockup for promoters is about 180 days, and BRLM to the issue includes ICICI Securities and others. Back to you.
Okay, all right, Abhishek, thank you very much for that. The next one is Bombay Stock Exchange, BSE. Vamakshi is here with details. Vamakshi, over to you.
Well, absolutely. BSE expected to open in the green, and that is because starting November 20th, weekly derivative contracts for Bank Nifty, Nifty Midcap and Fin Nifty will be discontinued, and this is to be compliant with SEBI's direction on rationalization of weekly contracts. Nifty 50, therefore, will be the only index that will be available for the weekly expiry contracts. This, of course, bodes, is negative for NSE. That is because Bank Nifty contributes nearly 50% of NSE's option premium volumes, and in fact is NSE's biggest contract. In fact, IIFL Securities estimates the net impact of NSE's full year volumes to be around 30 to 35% on account of this development. But NSE's loss could turn out to be BSE's gain. Now keep in mind that BSE's option tariffs are nearly 7% lower as compared to NSE, and given the move to only 2 weekly expiries for both of these exchanges, BSE's market share gains could actually accelerate. So given that development, going with the green for BSE.
Vamakshi, has any I found it quite strange last time when this the SEBI regulations came, that a lot of brokers wrote notes, but no one talked about this market share business, market share moving. I don't know why, because people that we speak to, like Rajesh Baheti, etc., have been pointing about this quite a bit. We've been and stock reacted right that day. But I've not seen any. I think Jeffries wrote a note, and there were a few others who wrote, but nobody addressed the market share issue. I don't know if IIFL has done it in the note that you cited.
Yes, absolutely. It's IIFL that has actually said that the market share could accelerate for BSE. Given that, now especially for BSE, now there were 2 expiries and now it comes down to just 1, and NSE for 4 it comes down to 1. So for BSE, that may imply some acceleration of market share.
All right, Vamakshi, thank you very much for that. It's interesting because there was some confusion whether exchanges will be allowed to use, whether they had any option it had to be Nifty or it could be had been Bank Nifty as well. And we had checked at that point. They said, well, both are open.
Yeah.
But the person I spoke to also said that ideally it should be Nifty. So I said, why?
The flagship.
No, is that
index.
well? To hedge the Bank Nifty is much more concentrated. So 3 stocks, HDFC Bank, ICICI Bank, Axis Bank, will move things violently around. So it's a more, it could. In that sense, it's not desirable. But I don't know if there was a gentle nudge in that sense.
Okay.
Or they really had a choice in the matter, but the impression that we were given was actually it was a choice and then they've picked up the Nifty in this particular case. But, I think we had Rajesh Baheti at that point, right after those SEBI announcements coming, and we were asking him whether the NSE would choose Nifty or the Bank Nifty. He said, well, if they choose the Nifty, the earnings damage is going to be much more as compared to, what they'd see if they'd chosen the Nifty Bank. All right, well, we'll take a quick commercial break here. When we come back with our market sort of guests, but just to recap the stocks on and just to tell you what we put out, Bandhan, Anand Rathi, Oberoi Realty, Mazagon Dock, Sansera Engineering and BSE are names which perhaps start in the green. And on the red side, IRDA, TCS, Tata Elxsi, Ola Electric are some of the names which start in the negative. Manisha is now joining in with a roundup of all which what is making news as far as commodities are concerned, and it's got to be oil once again. Manisha, morning.
Morning. Well, absolutely, Prashant. With 3.5% of gains overnight, the Brent crude prices are back above $78 a barrel. And this is going to be a second weekly gain for the crude oil prices. Well, a couple of things. One is the Hurricane Milton, which has struck Florida, and you have 3.4 million houses out of power and 25% gas stations out of gasoline. So there is going to be a rising fuel demand from these areas. The second is the Israel statement suggesting that any response to Iran would be lethal, precise, and surprising. So that also seems to be adding some premium. But apart from that, the metals also have come back quite strongly in the overnight markets. We've seen 1 to 3% of gains come in for aluminum, zinc, and copper. The gold price is also gained up by nearly $40 in the overnight markets. Well, the U.S. inflation did ease, and there is a surge in unemployment claims there. So that also seems to be supportive.
Thank you very much for that. We will slip into a short break. We'll come back and connect with Siddharth Khemka of Motilal Oswal Financial Services for some fundamental stock talk.